Okay, here's an update on Ripple. Let's do a top down. The monthly chart, not a lot of data, so obviously no cycles. The biggest thing here is that this was the entire move up. So this is your wall, the wall concept. We're below halfway. Are we going to get 100% retrace? The odds or the probability is never that you're going to retrace 100%. But anything can happen. We're kind of coming in here more like an 80% retrace. So we're closer to a low. If you were chasing Ripple at 3, shame on you. This is where you want to be buying. All right, so the weekly crossed back on the middle of January with the break of the 8. You also broke the swing line here on the way up around 2. So you broke that low, set in line this intermediate term pullback, couldn't hold the 8. Now you retest the band. So this is the right logical area for the market to kind of go sideways here and maybe turn the cycle back up and make a higher low. So we have a weekly cycle playing out just like the rest of the market right now. The weekly cycle is low, but maybe you do have a couple more weeks. When we look at the daily chart, you had a nice run up, held the 8 the whole way up, topping tail after a pretty, obviously a big move, percentage move. Couldn't hold the higher lows here on this bottoming tail, broke that, broke the bands, and then when you break the bands, you tend to get the move to 200. We don't have a pie line on here. It's probably coming in around like 40 cents. So again, this is a good long-term area to be nibbling. It's just there's no reason to be in a rush. If you took profits like we did 2 and then into the move into 3, you could put some risk back on here. But we'll just wait and see. I want to see how price holds up at the end of this weekly cycle and then no rush. We'll see if it can hold at 200. And then the next step would be to get this 8 period moving average to start to turn back up. That's going to show you the intermediate term trend. So you got to be multi-duration in our thinking. So you have the long term, you have intermediate term, you have the near term. Long-term charts, monthly, weekly, daily, intermediate term, daily, 4-hour, hourly. So when these hourly and 4-hour charts can start to actually stop making lower lows, start making higher highs, then you want to be getting more aggressive. That'll get you on the right-hand side of the cycle. That's all this is. Cycle up, cycle down. So you don't need to be aggressive here. You want to be aggressive here. So yeah, can you if you take profit into any of this strength, which is what the pro's doing, the amateur's chasing. The novice is afraid here, was waiting for more confirmation here, thinks they missed it, sees it keep going, now just can't sit and watch, and they buy, and then they think they're right into the highs, and then that was that. So if you took profit into this move like we did, then it's okay to start putting some back on. If you bought well here, you take some off. You trade it around, but you know full well that this is still in a down cycle. All right, so the right-hand side of the chart is going to be somewhere over here, and that plays out with this weekly cycle. All right, guys, hope that helps.